So Machiel, we're here in Central Park. I'll never forget, it was 3 or 4 weeks ago, and well, actually it was nearly 6 months ago we started talking about America. But 3 or 4 weeks ago you started asking me a lot of questions. What is the right structure? How are we going to do it? And I thought to myself, this man must be a CA. As it turns out, he's an engineer with an MBA, which is actually worse. But no, but the reason I say it is that you very much come from a scientific approach, and it's all about trying to understand whether there is an opportunity, whether there isn't an opportunity. What's been your experience of coming over here for the last week?
My experience has been that there is for sure a big opportunity. I think specifically opportunity in Atlanta is one that can close quickly. You have to move. I think in Orlando the opportunity is much longer, but it's definitely there. And then Memphis, like we all agreed, is quite an interesting market, quite a nice surprise. And that market for sure is, I think, even a longer opportunity. They mentioned to us that it grows typically at 4% and they don't expect major changes. It's a constant thing. And then lastly, the one in New York, I think the growth opportunity is a long-term one. So from that perspective, it's a long-term view. So all of the 4 markets has got a little bit of a different twist. And depending on what you actually would like to do, you can actually find one that fits you better than another.
Tell me in Atlanta, I know you actually came 2 days before us.
Yes.
To check us out and to check out there's the other guys in South Africa doing what we do, and you went to go and check it out. Now for me, one of the most important things for people is for them to be able to compare an apple with an apple.
Yeah.
And you've actually seen more than I have, because I didn't go. But I mean, what was your experience of an apple for an apple, just particularly with regards to Atlanta?
Look, I must say the Atlanta team that you've got there, RJ and the boys, are by far the better team. The other people, I haven't really met them, but I actually went and looked at all their properties, and their properties are just in a completely different slot. It's actually a lower to a medium slot, and the properties that we saw from RJ was, I would say, medium to high. The product and the quality is just so much better. I mean, the scary pictures that you normally see on the internet is actually true. There's some really, really bad properties, and when you look at what you saw on the internet and what it actually looks in real life, you feel like they swooped up the photos. And the other thing is that the internet doesn't give you context. You see a property, and we saw one specific condo. It was in a completely separate neighborhood from the bigger center. So if you don't actually see where it is, you wouldn't know that, and you would have guessed that it's part of a bigger product, which it's not.
That's why I always say you invest in people, not property. And with a guy like RJ, he tells you to invest on this side of the road because you go to the good schools, and not this side of the road. And unless you actually know the guys on the ground and you trust them, you're gonna buy the rubbish all day long, but they can't sell to anyone other than unsuspecting South Africans.
Yeah, and RJ himself at one stage, before he was settled down, he also said he started and tried to do other markets, and eventually knew now where it is after, I think, 6 or 7 years now.
Now tell me one last question. You sat next to me on the aeroplane, and you've got a very fancy spreadsheet. Just tell us a little bit about your plan, where you said you can buy 1 cash property and then 2 leverage properties, and if you do it right, you can actually pay it off within 3 years.
Yes. What you can do, the yields in Memphis, for instance, is so large that you can actually buy 2 units. We have the opportunity to buy it with 60% finance, and if you have an additional property, you simply take that net cash flow and you put that back into the, let's call it the bond of the Memphis property. And we worked out that if you buy 2 like that, you can pay the 1 off, and you will actually have a net clear property in Memphis after 3 years. So with 3 properties, you can actually build quite a quickly portfolio, and that, I think, is a lot of people's idea.
So just to clarify, you buy 3 properties now, within 3 years you've got 2 paid for cash. We believe the market's going to turn into a way where you'll be able to refinance property from a bank at some point, which will allow you to ramp up that investment.
That is correct. So that Memphis properties allow you to do that. Because the yields are so high, you can service both the bond, and you can of course get some net cash outflow, which you then plow back and don't use that.
My very last question, was it all hard work, or did you have some fun as well?
Hey, we had some good fun here.
I won't share the pictures of your outfit from last night.
Yeah, but if you play hard, you must work hard as well.
Oh, awesome. Well, listen, it's been awesome having you here, and I look forward to seeing you back home.
Thank you very much.
Cheers, mate.